My view is that the securities laws should try to protect American investors, and I'm not sure that this bill, if it's turned into law, will actually make American investors better off. So, as you said in the opening, the key provision in this bill is to make sure that the US regulators can inspect the audits of companies overseas, including those in China. Right now, China does not allow audits of its firms that trade in the United States to be inspected by US regulators. These inspections are supposed to take place every 3 years. So Facebook, for example, has its audits inspected every 3 years, but Alibaba does not. And what the Senate bill would do is it would require the exchanges to ban trading in the shares of a company that goes 3 years without inspection. So if this becomes law, and it might not become law, then there's a good chance that shares of Alibaba will stop trading after 3 years, because in my view, it's highly unlikely that China is going to allow inspections of audits done in mainland China. This will cause the stock price of these firms to fall. The people controlling these firms will then be able to take these firms private at a very low price to the disadvantage of American investors, and then relist the firms in Hong Kong or mainland China or elsewhere. So I think that in terms of protecting US investors, this bill, if it becomes law, could backfire.
Yeah, but on the flip side, you're also saying, given us the China view here, saying that delisting Chinese companies plays straight into their hands, and the Chinese authorities don't care even if Alibaba does get delisted, because they're trying to build their own ecosystem in this part of the world.
Right. So I think that the people that control Alibaba, at least for now, would like to keep it trading in the United States. I think the Chinese government is not particularly interested in having Alibaba trading in the United States for a number of reasons. One is that having these companies trade in the United States gives rise to frictions with the Chinese authorities, because the US authorities want to impose their rules on these companies. Another is that even though I think the Chinese government is very proud of Alibaba and what it's accomplished, they are not interested in having these private enterprises grow so powerful. So this would be a way of cutting them down to size. And the third is that China is interested in building up its own exchanges, and it would be nice for Alibaba to list shares on the Shanghai exchange or another mainland Chinese exchange. That's more likely to happen if they're delisted from the US exchanges. So I don't see the Chinese government coming in to allow inspections of audits that are done in China. So if the if the bill becomes law, I think these companies are going to leave our exchanges, and they're going to leave on on prices that are not going to make American investors better off.